Hello, this is Paula and I'm here with the weekly blockchain brief. Luna's founder, Do Kwon, says that he's not on the run. We still see a lot of interest for Luna and a lot of believers that it will eventually bounce back. So we continue to follow the latest developments around the project. After a long time of silence, Do Kwon finally tweeted right after Singapore police stated that he's no longer in the country. The tweet said, I quote, "For any government agency that has shown interest to communicate, we are in full cooperation and we don't have anything to hide. As well as we are in the process of defending ourselves in multiple jurisdictions, we have held ourselves to an extremely high bar of integrity and look forward to clarifying the truth over the next few months." Meanwhile, the South Korean prosecutor's office is seeking permission from the country's foreign ministry to have Kwon's passport revoked. If that happens, Kwon would have to return to Seoul within 14 days. And we move to Celsius. While some wait for Luna to bounce back, the case for Celsius seems a bit more realistic. The organization just revealed a plan to revive the organization through selling $23 million worth of stablecoins they still own. The firm has asked the court for permission to offload its stablecoin holdings in order to fund operations. It came right after the CEO outlined a comeback project for the firm called Kelvin. The plan includes re-enabling some key services and would allow customers that have funds in custody to stake, swap, and take loans for a fee. Despite the bankruptcy filing, the firm's management believes they are not doomed and can continue to operate, as many companies have done in the past after filing for bankruptcy. Moving to news from Compound, the interest rate protocol Compound Labs launched a new feature that allows institutions to borrow via digital assets as collateral. Authorized institutions can use supported ERC20 digital assets, including Bitcoin and Ether, as collateral to borrow USD and USDC at a fixed rate. Currently, the rates are starting at 6% APR. No repayment schedules are also necessary since the loans will be over-collateralized. At the current time, the crypto companies and banks can wire US dollars directly into the Compound accounts and earn up to 4%. But with the new shift in the business model, the companies will also be able to directly borrow from the treasury, and this will extend their business line. Compound also took a further step into ensuring the stability of their firm by acquiring an S&P rating, which currently stands at single B. Macro. In the macro session today, we will focus on the most awaited event this month, the Fed's meeting and their hike decision, which will be on the 21st. Expectations of how aggressively the Federal Reserve will raise the rates in its fight against inflation hit a fresh high this week. CPI data surpassed the economists' expectations in August, rising 8.3% on annualized basis compared to the projection of 8.1%. This caused the bets on the so-called terminal rate to increase to 4.45%, which is more than 200 basis points higher than the benchmark overnight interest rate currently, and compares with a projected peak of around 3.7% just last month. You may see on the graph that the projected Fed funds rate all the way to July next year, with its peak in March, when the hikes are expected to actually hold. However, with the current pricing of the base rate, we're still in highly negative real interest rate environment as discussed last week. So the question is if Fed will surprise us with further guidance of bigger hikes, or it will hike even less than expected. In both cases, there will be probably a lot of volatility around those dates, so consider hedging your positions with the current fragile state of the crypto markets. And we're moving to today's VC section. We have an interesting deal from Infinity Exchange that closed a $4.2 million seed round to facilitate institutionalization of DeFi. The round was led by top-tier financial institutions, makers and funds, GSR, SIG, CMS, C-Squared, and Flow Traders. And while this is not the largest round of the week, I find it particularly intriguing since any technology contributing to the institutional adoption will bring first efficiency to the space and, of course, liquidity, which will help the space grow. An interesting fact about the Infinity Exchange is that it was founded by the ex-Morgan Stanley's head of structuring, Kevin Lepso. And the platform is essentially a decentralized finance protocol that provides institutional-grade capital efficiencies for traders, yield farmers, and global fixed-income investors. The second deal, we have a massive seed round by the token management platform Magna, which raised $15 million at a $70 million valuation, which is a bit unusual to give so much equity in the seed round, but Magna managed to get some really strong backers in that round. Magna is solving a key problem for crypto companies raising funds and managing stakeholders by providing a protocol for automatic distribution of the tokens. As you know, a crypto startup usually has multiple stakeholders, from employees to investors, and all have different vesting schedules, making it difficult for the firms to keep track of it, if not automated. Therefore, Magna is building token distribution software that makes it easier for protocols, DAOs, and crypto funds to send and also receive tokens. Also, the process that has so far lacked automation and has been prone to error is now improved on their platform. The round was led by Tiger Global and Tusk Venture Partners, but also strong backing was seen from Shima Capital, Circle Ventures, Solana Ventures, Polygon, Avalanche, and also Galaxy Labs were seen in the round. With the last deal of the day, we go back to the good old gaming sector. We saw some slowing down there, but we still see a lot of traction, especially in AAA game builders. In this regard, Revolving Games has raised $13.2 million in additional capital to make such AAA blockchain games. Multiple prominent gaming investors were seen in the round, such as Pantera Capital, Animoca Brands, and Polygon. And while we're talking about gaming, I found some highlight stats showing the agility of the sector I would love to share with you. So 738 million was raised by blockchain games and metaverse projects in August, which is a 135% increase from July, led by Break's 200 million funding round. In August, there were an average of 847,000 unique active wallets that interacted with blockchain games, and this is more than 50% of the industry usage. Trading volume of NFT games increased by 13.25% on monthly basis, and the number of NFT game sales increased by 83%, which results in a number of over 1.3 million game NFTs traded. Thank you so much for watching as usual, wishing you a great week ahead.